Hello, everybody. Welcome to Thursday. The S&P 500 was up 2.6% today, but that doesn't tell the whole story. It was actually down 2.5% in the morning. And so we had more than a 5% swing in the low to the high today. Really unbelievable. Now, this is the sixth time we've had this type of reversal so far this year. The last time we had these types of reversals was actually in 2008. And there's a reason that these happen in these big downturn markets, and that's because there's so many people that are betting on the downturn. Once you get a little bit of a tick upward, everybody starts to kind of panic buy back their short. So, for example, there was a lot of put interest in the market just before this report from the CPI that came out today. So, when you're buying a put, you're expecting the market to go down, and it did. It was down 2.5% in the morning, and some of those puts started to get sold basically to take the profits that had happened. And when they do that, the market makers start to buy back the stocks that they have shorted. And of course, that created what, if you watch the market today, it looked like panic buying that was happening. And that's a little bit like what we saw back at the very beginning of October here when we had this 5.7% run in the S&P 500 in 2 days. And it's just these people panicking to buy back the stock so they can cover their shorts in a big up market. Now, we ended up giving back all of that money anyway. So these aren't always the beginning of a new uptrend, although they can be. So you have to watch, eventually maybe enough people get involved. But I feel like this is probably another one of these short covering events. And, the CPI number came out today. The overall CPI was at 8.2%, which was a little higher than expected, but last month it was 8.3%, month of August. And so, down a little bit. But the core inflation, when you take out food and energy, was actually up quite a bit. It went from 5.9% in July to 6.3% in August to 6.7%, which is the highest we've had in 40 some odd years here. So that's bad news for the market. Matter of fact, there's so many things that happened today that would have been considered bad news for the market, including the two-year treasury, which is one of the things I really focus on here, that went up substantially in yield, which again is a bad thing for the stock market. Yet the stock market ends up going up 2.6% today. So we got to kind of keep our eye on what's happening as far as that goes. Really, we haven't broken out any trends or whatnot. But another thing that we kind of had happen today, it was kind of interesting, that probably helped this upturn, was that we got all the way down to a 50% retracement level. So what that means is if you go to the bottom of the market in March of 2020 to the top of the market in January of this year, we have now retraced half of that gain. And a lot of times people are buying on that. And so there's algorithmic trading and all kinds of things that come in where people are buying right at that 50% level. That made it possibly jump. And then we also today, and really over this week so far, we were hitting this 200-week moving average. So, we mainly talk about the 200-day moving average for the S&P 500, and we're well below that as far as that goes. But once in a while, we actually get, all the way down like we have today to the 200-week moving average. And so that's another point that people will buy off of. So, lots of things happening. Most of the things were kind of bad for the stock market, at least here in the near term, except for a few technical things that drove things up and a lot of short covering and profit taking on these put options. So really fascinating to watch how this goes. Now, this was a powerful move. Last time we had this type of move at the beginning of October, it was followed up with another day before things started to come back down. We do have earnings happening. We had some earnings today from Delta that weren't as bad as expected. We've got the big banks reporting tomorrow. So you could get some catalyst out of some of these earnings seasons to the upside, although they can also be catalyst to the downside. We'll have to see what happens. A lot more concentration is going to be put on the forward guidance and what these companies say they see coming their way than probably what they actually did in the last quarter, which at this point is considered kind of old news. So anyway, that's what happened today. Very fascinating to watch what's going on here. Very interesting to see what's going to happen tomorrow. And of course, I do have my show, Talk Money with Tom, on Fridays from 12:15 to 1 o'clock Pacific time. You go to YouTube, you can put in the Talk Money with Tom search and just join us, and you can watch. As far as that goes, you can put in questions. I do a summary at the beginning of that show of what I see happening for the week. So look forward to talking to you then. Thank you very much.